Hello traders, this is George from HPZ Trading. I created this video to share my trading style with you. I am a supply and demand trader. My trading is based on two automated indicators, the MTF Supply Demand Zones indicator and the Automated Trend Lines indicator. This is what you see when you load the MTF Supply Demand Zones indicator on chart. Red and blue zones are supply-demand zones of current time frame. Zones between dotted lines are supply-demand zones of the first time frame above current time frame. Zones between solid lines are supply-demand zones of the second time frame above current time frame. When you load Automated Trend Lines indicator on chart, you see bullish trend line if trend of current time frame is up. Also, you see a bearish trend line if trend of current time frame is down. Now I'm going to show you how to spot high probability trading setups. There are two setups that I use in my trading. On the first setup, we trade supply-demand zones that were formed inside higher time frame zones. We go long on demand zones that were formed inside higher time frame demand zones. Also, we go short on supply zones that were formed inside higher time frame supply zones. For this setup, we are going to use the MTF Supply Demand Zones indicator. Let me give you some examples. 1 hour demand zone was formed inside 4 hour demand zone. Price touched it and rallied. 4 hour supply zone was formed inside daily supply zone. Price touched it and dropped. 5 minutes demand zone was formed inside 30 minutes demand zone. Price touched it and rallied. You should avoid trading first setup if you see more than 3 zones of current time frame inside higher time frame zone. Also, you should avoid trading first setup if width of current time frame zone is less than half of higher time frame zone width. For example, if width of higher time frame zone is 40 pips, take the trade if width of current time frame zone is less than 20 pips. On the second setup, we trade supply and demand zones that were formed in compliance with current trend. If trend of the current time frame is bullish, we go long on demand zones that were formed in compliance with bullish trend line. If trend of the current time frame is bearish, we go short on supply zones that were formed in compliance with bearish trend line. For this setup, we are going to use MTF Supply Demand Zones indicator and Automated Trend Lines indicator. Let me give you some examples. Supply zone was formed in compliance with bearish trend line. Price touched it and dropped. This demand zone was formed in compliance with bullish trend line. Price touched it and rallied. This supply zone was formed in compliance with bearish trend line. Price touched it and dropped. You should avoid trading second setup if trend of the current time frame is bullish, but price has touched higher time frame supply zone. Also, you should avoid trading second setup if trend of current time frame is bearish, but price has touched higher time frame demand zone. Now I am going to present you the main advantages you get with HPZ indicators. Both indicators are using a new algorithm, very different from other similar indicators. You can use both indicators on many charts simultaneously due to low CPU and RAM usage. Both indicators designed for professional manual traders after years of experimenting. All zones and trend lines are created dynamically according to price action of the market. Download the indicators and practice on a demo account. Experiment and create your own trading setups. You can find the links on description. Thank you for watching.